If you're watching this video, I suspect my thumbnail and title caught your eye of who's going to buy Zillow this week, next week, or next month. Let me give you some background. I'm a financial advisor, retired financial advisor, I'm no longer licensed, and a real estate agent. And so I have an interest in what's going to happen to the real estate industry, and I see Zillow as a major player and ultimately a disruptor. With that in mind, I've been following Zillow very, very astutely over the last couple years. I actually went and bought 1,000 shares of Zillow about a year ago, I guess it was, and it was at 45. It then promptly went to 36. But I stayed with it, and I wrote it out until it's at the end of their last quarter. They did a report, and it skyrocketed to 65. And that's when I sold it. In fact, before that, that was actually the only stock I owned at that point. I went to everything to cash because I foresaw what was going to happen to this market because of the overwhelming debt that our country, our citizens, our corporations were going into, and something would act as a catalyst to bring that bad seed to the surface, and the markets would react accordingly. And that's what you're seeing right now. But I want to stay focused on Zillow. The reason I'm really interested in Zillow, they're a disruptor. They have openly said, first Spencer Rascoff said he wanted to turn the buying process, the home buying process, into a 3-click process. And then after Spencer was relieved of his duties and Richard Barton came in, who was the founder and the largest shareholder of Zillow, he came in and he said he wanted to turn it into a 1-click process. Well, in essence, what they're saying is they want to eliminate the real estate agent and the broker as we know them today, eliminate the title company and the closing attorney as we know today, and bring all that under one roof through their portal, and make home buying as simple as buying a pair of shoes on Zappos or a computer on Amazon.com. And that's his dream. Well, again, I look at the overall picture and I say, who else wants to be a part of this? And I've watched Zillow, and then I've also watched Amazon. And Amazon has formed a partnership with Realogy. They formed a partnership with AARP. They formed a partnership with a company that does home repairs across the United States. And then they came out with their turnkey initiative. I guess that was probably back in last October. And what it basically says is that if you buy a house through turnkey, which is represented on the street by Realogy, they will give you up to a $5,000 credit on Amazon, and some of that credit is applied towards their smart home technology, their Alexa. Well, I saw that and I thought, my God, what they're trying to do is be in a position to convert every home as it changes hands into an Alexa smart home. And that will then give them access to the big data that comes out of the home. And to give you some comparison, they have a relationship with Volkswagen and BMW and a number of other car makers. And they gather the data into the cloud that comes off your cars. Microsoft also gathers some of this data. IBM's gathers some of this data. But Amazon, through their Amazon Web Services, gathers roughly 1/3 of all the data that comes out of all of our automobiles. That's estimated to be something, I believe, if I remember the numbers right, 4 gigabytes of data per day. I read a report several months ago that said this industry of the data out of our cars has a value of roughly $750 trillion, because now they know, for me, they know everywhere I go, what restaurants I eat at when I drive my car. I in fact got a thing from Google Maps, an email a couple of weeks ago that said, if you would like to see where you've been since 2014 in your automobile, here it is. And I'll be damned if it didn't show every place I went in my automobile since 2014. Well, this is data. And data is the gold, it's the oil, it's everything of the past. Once you get that data and then have the ability to slice it and dice it and categorize it and then feed it back to you to make your life better. And again, I wear a Fitbit. You might wear a Apple Watch. It's feeding data. My Fitbit feeds data to Google. Google knows what my heart rate was last Saturday when I ran on the 100-meter dash on the track. They know my heartbeat got up to 150, but they've seen that before, so they aren't so alarmed. But this is data. So how does that come back to Zillow? Well, if I'm Amazon.com, or if I'm Google, or if I'm Apple, and I want the data out of Kerry's house, what better way to do it is than to put myself inside that home buying transaction, and to put myself in a position where I can make Kerry's home, when he sells it, a smart home, which is going to become more and more desirable as that technology improves and we get comfortable with it. What better way to enter that field than to buy Zillow? Okay, so that brings your understanding and my understanding up to today. Now, the other thing you need to recognize and be aware of is what's happening to Zillow today. We know that because of the virus, we real estate agents, we know we're going into what Gary Keller just wrote me an email and says you're going into a pivot. And that is, the market's going to change dramatically. It will not be the same as it was 1 month ago. And you need to adjust to it. Well, part of that pivot is going to be a slowdown in the real estate market. If I'm a seller, I don't want a bunch of old strangers walking through. I don't even want a bunch of young strangers. I certainly don't want an open house. If I'm a buyer, do I want to go into a stranger's home? Do I want to go and get in a car with a real estate agent for 5 hours and go through 10 homes today? No, I don't want to do that. So the real estate industry is going to slow down and it's going to change. I did a video just last week saying it's going to go towards video. And that is to say that you're going to have to do video tours of virtually every home if you're a real estate agent, so that potential buyers don't have to go through 10 homes. Maybe they can look at 10 videos and then say, those are the 2 homes I'm interested in. Let's make an appointment to see them. I want to make sure the house is cleaned and it's sterile and those people aren't sick. You know the drill. And that'll go away. But even by virtue of the fact that this is happening, even after it goes away, the world is going to change. The airports are not the same as they used to be before 9/11. We know that. We know business is not going to be the same after the virus. It's going to be different. So that's where we're at. Now I want to take you and let's take a real close look at what's happening to Zillow today and why I believe someone will buy Zillow, if not this week or next week, next month, or sometime in the very near future. Let's take a look at it. Okay, this is a chart of Zillow since its beginning back sometime in, it looks like August of or September of 2015. If you need a good stock chart, and this is a free stock chart, it's tradingview.com. And I've used this for a number of years, and it's free. So, but here you see the growth of Zillow up through 18, and then it took a dive, and then it came back, and then this was where I bought it for about 46. And as you see, then it took a dive down to somewhere around 30. And then came up, and this is where I sold it, up here around 65. And then since the last couple days, you can see it's all the way down here to 20. Right now it's selling for $28.53. Okay, so it's a bargain. Let me dig a little deeper for you. And if you scroll down here, it's telling you your volume, it's open, price, close. But click on more. And what more gives you is a real close look at the valuation, a lot of the metrics relative to the stock. And I'm not going to get into all the quick ratios, the current ratios, and all that. What I want to look at is, number one, the price. It's down 30-some%. But what I wanted to really focus on is how stable is Zillow. And so I'm coming over here to the income statement, and I see their net income last year to fiscal year, was a negative $305 million. So they had a $305 million loss. Their free cash flow is a negative $660 million. That means they had more going out than they had coming in. And if you have followed Zillow, you know they have gotten very heavily into the instant offers, and they've been going out and buying a lot of homes and then trying to flip them, but they're building their inventory, so they're in a very heavy negative cash flow position, which then puts them in jeopardy. Here's their total debt. They have a total debt of $2.5 billion. Okay, that's a sizable debt. They have current assets of $3.5 billion. So they have more assets than they have debt, but they're having negative cash flow of $660 million. That means they're having to pay the debt service on $3.5 billion, plus they're having to pay their operating expenses, and they're probably still buying homes, and that's why you see the price of this stock just plummeting. So my question becomes, if I'm Amazon, if I'm Apple, if I'm Google, and I want to gain entry into the real estate business, who is a better entry? Is it better for me to try to buy Keller Williams, or try to buy Berkshire Hathaway away from Warren Buffett, or something of that nature? Or is it better to buy Zillow to gain entry into the market and give me then access to the data in all the homes potentially that are sold on a year-to-year basis? Now, I also know that Amazon has gotten into a relationship with some of the new home builders where they're making them smart homes. So familiarize yourself with this and watch Zillow. Zillow just went positive, but I don't think it's going to go positive. You got to understand, we had a $3,000 drop in the Dow yesterday. What we're seeing here is what is called a dead cat bounce, and a big part of that right now, it's saying here the Dow is up 195 points. A lot of that is up in here. A lot of people said, I'm going to short the market because I know these prices are going to drop. What shorts mean is that you go and sell a stock that you don't own, and your broker has to buy the stock to cover your short. So then when it drops like this, you go to your broker and say, okay, cover my short. I want to buy back from you the stock that I sold, and you make the spread. You make the difference. The broker gets crucified. And so that's another reason why financial institutions are going to have a real issue now. But that's why we bounced. So that's my basis for saying, why do I think there's a possibility that somebody is going to buy Zillow? And that is because if the price drops much further of the stock, the price of the company comes down accordingly. Okay, so that's why I'm asking the question, who's going to buy Zillow this week, next month? Somebody, I believe, is going to buy them because they're such a bargain, and they represent the new wave of real estate, and they're in the lead. And then again, this need, this desire to gather big data. And there is no more big data anywhere on this earth than in my house, and in your house, and in every house in the United States. And I know there's privacy issues and concerns, but folks, this is technology, and this technology is going to change our lives for the better. We're going to have smart toilets, we're going to have smart microwaves, and we're going to have smart pantries. The technology is going to make our lives so much better, to the point that we probably won't be as susceptible as we are today to a virus from a small community it's not a small community, it's a very large community in remote China, where a abandoned building had some bats in it, and those bats are now a threat to my life. Technology, I don't know how, but it's going to negate that sort of situation. So we've got to embrace it. We've got to say, this is the future, and I want to be a part of it. Okay, if this information is good for you, subscribe, tell your friends about it. I don't talk about the stock market in technical terms because I know most of my viewers don't want to hear that. There's other places you can go to hear that. Let's talk about the stock market based on how we can put ourselves in a better position. I'm going to do a video this week on how millennials should get involved in the stock market. I read an article in the Wall Street Journal, and I think there's so many opportunities right now that if my granddaughter, who is going to turn 21 years old, I believe it's in July, she needs to be making an investment today. And I need to be helping her make that investment. I should not buy her a sweater or a skirt or even a camera lens for Christmas. I should buy her Amazon stock. I should buy her Google stock. And we as grandparents and parents should be tuning our grandchildren, our millennials, into this is your future. Buy into the people who are going to change your life and own part of the most magnificent companies in the world. It's an opportunity that you can't pass up. And we as grandparents and parents need to help them get there.